This episode of Unaccountable is brought to you by Keeper. I mean, it's 1099 season soon. As January approaches, it's that time of year where we all start pulling out our hair and gouging out our eyeballs over the administrative workload that is collecting W-9s and issuing 1099s. Well, at this point, you've probably heard of Keeper, maybe from their stark raving fans or the unaccountable host who just gushes over them nonstop. Keeper's a practice management tool that's built to focus on the bookkeeping community in the month-end close process. And Keeper's 1099 tools make it incredibly easy to gather all the W-9s you need and know that when you need to issue a 1099, it's correct. This has personally saved me and my team hours of work each month and years of our life in stress every single year. If there's ever been a better time to save money and use that extra time to grow your business, it's right now. Get started with Keeper by going to unaccountable.co/keeper. That's unaccountable.co/keeper. Welcome to Unaccountable, the world's okayest accounting podcast for product news, education, and updates. I am your ledger legend of a host, Tyler Otto, and I'm joined by the Count of Accounts, the famous Jeremy Van Grohl. Hello, sir.
Hello, sir. You flatter me. How are you doing?
It's a little bit of a soul-crushing season. Good news, I told you I was going back and doing classes to finish my CPA. I need to post 3 comments tonight, on a discussion thread, and I am done. Now I just, got to find time to actually sit for it. But we're making progress, man. And, I'm going to go from team you don't need a CPA to team CPA all the way.
I don't know if I could like you less, but I feel like once you have those credentials, I might like you less.
Oh, yeah. Really, I'm on team sellout, right? I'll sell out for whatever side I'm on. Very happily, but I'm going to raise my prices when I do it. So
speaking of that, you had a little bit of a rant before about some pricing. You only told me very little about this, so I'd love to hear most of it live.
So pre-recording and in our friend chat, I had a sales consult today with a guy that was flabbergasted and frustrated because he had a bookkeeper already for $200 a month and was very disappointed that he got bookkeeping and reports, and that's it, for $200 a month. Then he also complained about his current tax preparer. He has, several businesses, his personal attorney with Schedule E, and by the math he told me, it worked out to about $1,000 a business a return. And his biggest complaint was my current people I use, it's they only look at my tax return 1, maybe 2 days is all they spend on it. And that's it. And I'm kind of sitting there thinking, doing the math, a full day of, you have a CPA, spending a full day on your return, $1,000 actually sounds like a good deal if you're getting a full day of his time. And it's just it killed me to the point where obviously this is not a good client. I'm not going to take it on. But when you're on those calls, you get an adrenaline rush because you're in fight or flight mode because you don't want to tell this guy to go pound sand, but you also want to be nice, respectful, but also hey, you might need to rethink your expectations. So I was commenting to our friends, I think I'm going to add a pricing page on my website. And when you click on it, it says, if you are looking for the cheapest price, go find another firm. We are focused on quality. Reach out if you're interested in getting quality work done for you.
Yeah, as long as you throw a dad joke on there too, I feel like that's perfect. While you're talking, I was trying to do the math. So let's say during tax season, which we know nobody gets yourself into mid to the end of February. You would then have 45 days to do something. And if you want a full day of my time, and this is my time where I'm a tax person, I make 80% or 90% of my money that year. Yeah, $1,000 a day, 45, 50,000, that doesn't work out. I can't stay in business for that. You should do that.
No, it's just absolutely brutal. So I don't know. You got my blood boiling. You came in hot last week. I'm hot today. I'm ready to go, man. Bring it on.
You're hot every day. All right. With that note, let's go into the news. So a flurry of government-related activity that we at least need to spend some time on briefly and unpack, but we got a full agenda. So I hope everybody's got buckled in for the long haul here. One major thing that impacted me in the nonprofit world was not last Monday. We're recording on the 5th. I feel like we need to say that 5th of February because
things are going to change every day.
So much going on. So last Monday, I believe it was, they put a freeze on all federal grant funding and stimulus dollars and all of that. So that just like I had 3 or 4 or 5 clients calling me right away. What do you know? What are we going to do? All of that. And thankfully, like a federal judge put a halt to that, at least temporarily. But my only advice to them was like, I don't know any more than you know at this point, but if you get these federal funds and you have it, put in your request for reimbursements that are valid, and you can now as soon as possible, and do that going forward, because you never know when the spigot's going to turn off. And that, like, you need to assess your programming and your costs, right? Like, what are you doing? How much of your mission work gets funded by these federal dollars? How are you going to have to work through that and either cut back on things, find other revenue sources, whatever it is, to maintain your mission work? So just some crazy busy time that day.
Like,
Oof.
are you concerned as a business owner that primarily serves nonprofits who a lot of their funding comes from grants? Does that worry you at all?
Not a lot, honestly, because I think even, I would say maybe a third of our clients maybe get federal funds, if that, right? So we're pretty diversified there. And even of those, maybe the one that has the most, maybe 50% of their funds come from government resources.
Okay.
You know, if we get us involved, we try to get in there and be like, you need to diversify revenue. If you're not doing fundraising, let's talk about how to do that and make sure you know what's going where. So I'm not overly concerned. I feel like this is kind of like COVID, where it's almost an opportunity because people should be looking at their numbers closer, and I can help you do that in our team. So yeah, I think it's an opportunity.
That's brilliant. Well, Next up, I mean, you sent me a great article about some taxpayer advocacy going on. You had much more time to prepare on this article, so I want to hear your take. But the list of things that are promoted in this draft legislation, the Taxpayer Assistance and Service Act, this could be huge.
Yeah, it could be. And by more time than you to prepare for this, it's probably in the seconds, not the minutes. So it's perfect. But yeah, like some of this sounds good, right? Like, you know, expanding independence from the National Taxpayer Advocate from the IRS. I have another thought about this, but independence in things right now don't seem to be the highest priority, in my opinion. But it's supposed to be in there. But like streamlining resolution of tax debts, that sounds fantastic. What was the one I really liked? What's the whistleblower?
I mean, you should go down the list, because like simplify foreign bank account reporting compliance, that fewer taxpayers fail to get dinged for filing key forms. Like, that's a huge win if that goes through.
Yep. Improving math error notices. So if there's just basic math wrong, getting that out there and making it more efficient, getting it communicated so you can make the fix necessary.
I love the last one, though. We're going to protect hostages from unfair tax processes and penalties. We're going to say, oh, we're finally going to cut you a break if you were a hostage this season.
Yeah, right? Least you can do. No, I found the one that I thought would be most important for this is increase civil and criminal penalties on tax professionals that deliberately take action to harm their clients. Yep. I feel that's a hard thing to prove. I feel like that you could, you know, hey, this mistake happened or whatever, but just all the more reason to make sure you have your processes and your quality checks and all that done, because penalties are going higher should you negatively impact the clients that you're filing for.
Here's the question, though, because it's getting both civil and criminal penalties. I look at, like, you called out the point. Yes, you have to prove that it was intentionally, deliberately to harm the clients. And how many of these lawsuits are we actually seeing? Like, you saw the guy in the Northern East, the tax wizard, right? That was just like getting everyone's tax bill to zero. And he basically ended up having to refund all the money to his clients and the IRS, more money than he ever has. And it's just like, so is that going to make this even more drastic? Or like, I don't know the full, what could make it worse? Or is this more a deterrent sort of thing where it's like, hey, it's going to hit you even harder. Think twice before you start doing some of this shady stuff.
Yeah. And I'm definitely not a lawyer, but if I recall the little bit of law knowledge that I have, the criminal part is hard to prove, but like civil is way easier, right? I feel like some of those big cases out there where there was a criminal complaint, like that can't happen. And they come back into a civil lawsuit and suddenly like, oh, they still won $10 million or whatever it was. So yeah, I mean, it's going to hit you in the pocketbook for sure.
The one other one I really like here is simplify Or streamline reviews of offers and compromise to facilitate taxpayer resolution of tax debts. You know, when people basically come to the IRS and said, hey, we realize we did something wrong. We want to get right. Like, we can't afford to do everything we need to get right, but here's our offer and compromise. And like just getting that stuff through quicker, I think will be huge. Also just, you know, clear up the bottleneck, the IRS, because why should we go after the people that are self-selecting and identifying that they'd messed up? Yeah, I'd rather the IRS not focus on them and go after the people who are deliberately evading taxes or doing shady stuff.
Yeah. Let's switch gears there and talk about the IRS and their efficiencies over their 2024 processing. So the report was released last Thursday by the Government Accountability Office, said the IRS had a goal for processing individual paper returns in 2024. How many days do you believe that goal was?
I bet their goal was 30.
No. The goal was 13 days.
Really? Oh, did I say 30? I meant 13.
Yeah, I paused for a second. No, nice try. You're lucky you own the sound clips here because that would have flown, but I love it. But yeah, I guess it was 13 days to process an individual return, but they averaged 20, which still, like you said, 30. Like I feel like that's still okay, but then you think about the millions of applications they got to go through, and yeah, I don't know, but didn't quite make their goal there. And then the other one, too, was responses to taxpayer mail. What % of them were late?
100.
Surprisingly not. That's what I would have went with, too. 66% of them were considered late at the end of the filing season. So,
but wait, are they keeping their own scoreboard on this?
I feel like they are, right?
I mean, this is like when I worked in corporate and we had an overseas firm that they had to meet certain transaction levels of accuracy. And like they would send us an email on like the third day of the month while we're trying to close out and say, hey, let us know what we missed this month. And then the next morning at 8 a.m., they would issue the report. No one said there was any mistakes. We have 100% accuracy. And it's just like, I feel like it's this own self-reporting going on.
Yeah. Can I potentially liken this to the NFL officials at a Chiefs game? Oh, okay. Super Bowl is around the corner.
Well, and this episode's going to drop after the Super Bowl, so we'll see how well this clip ages.
Yeah, maybe that'll be bad. So, I mean, at least they put out a report, but I agree with you, like, without looking at who's keeping the statistics and what they're doing. Yeah, and then if all these cuts come in place that are proposed for the staff and things there, it's going to be a little spicy, I think. Yeah.
Do you have one more article? Do you want to stay on the IRS?
I got one more thing. So the big news also this week has been tariffs, right? So we're supposed to have 25% go to Mexico and Canada on all imported goods, except Canada energy was only 10%, an additional 10% of tariffs on China for their things. Have you ever had to deal with that in your professional careers?
I mean, I have stuff getting more expensive. But no, I feel like this is the economical Ross and Rachel. Will they, won't they? Like every day we're wondering, right? Yeah. Yes. No, I mean, I'm just keep waiting to see my clients' costs just skyrocket, especially my hotels I've got that have restaurants. It's like, what's going to happen to some of their supplies, materials, produce from Mexico? You know, is avocado toast going to become the highest priced menu item? I don't know.
I saw something. It's going to be Americados. It's not going to be avocados anymore. I agree. I was actually at a publicly traded packaging firm when the first set of Chinese tariffs came out. And first of all, like tariffs, not a lot of them happen right now. Prior to that, have ever happened. So like the financial arm of this organization, we don't even know what to do at this point, right? Like, oh, how do we even track this? You have to like just create a whole system to do this. And then where do you send it and all of this? And then on top of that, like this organization bought foil, right? And foil came from China. So it was like, now we need to not only track this information, make sure we're collecting the tariff, submitting to the right place, but now we need to reanalyze all of our input costs. And do we need to get new vendors and new suppliers in and things? And it just got to be amazingly more difficult as a financial function. So if you are in this, people out there, I feel for you. This is going to be spicy and hard. And like we all talk about, there are not a lot of financial professionals out there, already a shortage. And you are going to need more smart financial minds to work through this, both the tracking aspect and the cost analysis aspect, if you're dealing with any of these tariff.
And now that Jeremy has pointed out how all of us are going to lose money, can I give like a little bit of ray of sunshine?
Yeah, let's hear
Okay,
it.
let's leave the IRS. Have you heard which new, I guess, financial tool we all know and love? I know you know of these guys. Just offered their own new banking product.
Oh, this was Ramp, right?
You are correct, sir. So Ramp just announced Ramp Treasury. If you go to ramp.com/treasury, you can look at this new offering they have. But Ramp is now getting into both operating bank accounts so they can hold your money, and then they also will allow you to invest. And you can do that investment, the holding account for cash value. Oh my gosh, the other day it was 4.2. Right now it's 4.4, but the operating cash account is 2.5. Now, I could find better rates in personal bank accounts, but I have not seen anything better for business accounts in a long while. This is, I mean, I love my team over at Relay. Like, I still love their profit first method, their auto allocations, everything. But holy smokes, this is a shot across the bow to Relay, Brex, anyone else in this space. Like, they're doing it all, and they almost got their two-way sync for AP payments. Like, Ramp is moving and shaking.
Yeah, that's pretty awesome. I did not, my rep reached out to me, I think a week or two ago, and it was in January. And I'm like, are you kidding me right now? I don't have time for a rep call. So I had to read about this, I think, just like you did, instead of getting it presented to me. But yeah, totally cool. And if you're not doing that, and we all should have some reserve bank accounts out there, just in case things go awry, and I feel like that percentage of possibility is increasing, get some return on it. So this is pretty awesome.
Well, and what's funny, I have a team member whose husband is high up in corporate banking and whatnot. And like, this got into my team channel, and everyone's like, how long is this sustainable? Do you think they'll really do this forever? And I'm like, no, it's not going to be free forever. Every single one of these moves, you know, when Melio came out and gave us free bill pay, I loved it until it was no longer free. But then along comes Corpay until they're no longer free. And now Relay's doing it for free. And then Forwardly's doing it for free. And you know what, folks? All of them do it to capture market share, and then things will change. But if you're willing to adopt new technology and adapt, you can always find the next software that's giving you the best rates and jump around, or you don't have to. But for now, I'm definitely opening an account. Maybe Unaccountable will have one there so we can spread our money even thinner and then bounce more payments to our podcast editor, our softwares, everything else. By the way, we only lost $2,000 last year, dude. That's $1,000 each.
Hey, that's not so bad.
Mm-hmm.
I hope that now we put that out into the world, our tax return reflects that pretty accurately.
Yeah.
I love it. All right. So now that you have brought this ray of sunshine in there, can I be back to Debbie Downer? Go back to some more government things? Fantastic.
I mean, if we're not good for anything else, let's ruin the mood.
I feel like you and I, you know, whatever we're kind of looking at or whatever's going on dictates the rabbit holes we go down. Yep. So there was one more announcement made this week financially, and I'm going to call this game SWF WTF, because one thing they announced is creating a sovereign wealth fund. So I have a multiple choice question, but if you want to try to give it a shot without it, Tyler Otto, what is a sovereign wealth fund?
I am going to guess that is a wealth fund that Mr. George Sovereign owns.
No, that would not be correct. So what this is a government-owned investment fund, right? So they came out, and this was part of the latest round of financial things, where the Trump administration said, we are going to create this sovereign wealth fund. Okay. And some of the quotes in here were, to me as an accountant, I was like, are you kidding me? So Trump said specifically, we're going to create a lot of wealth for the fund. And I think it's about time that our country had this sovereign wealth fund. And I was like making the thing happen is not funding the thing.
Yeah.
And then even more, it was Treasury Secretary Scott Bassett and told reporters the fund would be set up within the next 12 months. We're going to monetize the asset side of the U.S. balance sheet for the American people. There'll be a combination of liquid assets that we have in this country as we work to bring them out for the American people. I feel like they're just creating financial buzzwords like assets and funding and whatever, and just throwing it together, but really do not know what is going on here.
What I hear is we're going to create an investment account and just put some of America's dollars in it instead of funding the things like that DOGE wants to cut. Maybe that's where you put the money and then let it grow. And Did they give like any specifics, or I thought you had a game built around this? What is happening?
So let's go to the questions and then another anecdote out of this. So a sovereign wealth fund is often funded by which of the following? Tax revenue, oil and gas exports, corporate bonds, or lottery proceeds?
I'm going to go A, taxes?
Not correct. So most of the countries that have these are the ones high in natural resources and fund them with their oil and gas or other exports.
Huh.
So they have a surplus of funds in their country within the government. So instead of doing whatever, they create this sovereign wealth fund, which is a fantastic idea to get some return on it and then invest those funds out. Right?
Okay.
Last time I heard, we are not in a surplus position in this country.
Yeah, that was my first question, because you talked about companies with a surplus. We've never, deficit is just, like the national deficit should have a face and be there on Mount Rushmore, because it's been around and done more for our country than many of the guys up there.
Yeah. And I think it was Bill Clinton the last time that we had a balanced budget or whatever. And Bill had some problems, but overall, I feel like he was fiscally responsible. So anyway, question number 2. What country has the largest sovereign wealth fund by total assets? Is it China, Norway, Saudi Arabia, or United Arab Emirates?
The UAE, they just seem to spend money like crazy. I'm going to go with them.
No, it is Norway.
I was going to go.
Yeah,
all right, those northerners.
Norway has a ton of and something I never knew till I traveled there, but they are super rich in oil and other energy, natural resources. So theirs is the most out of any of them. I think it's a couple $1 trillion or something, or billion. I bad research, apologies, but that's where we're at. So next question, what is the primary purpose of a sovereign wealth fund? A, to support social welfare programs. B, to stabilize the national economy and invest for future generations. C, to provide emergency relief in the case of financial crises. Or D, to finance the national military.
I would guess it's just B. You're just taking your surplus and trying to make sure that money doesn't lose money sitting in an account, right?
Absolutely. Spot on, right? Put money out there. So did you hear what they may potentially... what they threw around the organization that they may invest in with this sovereign wealth fund?
Please don't say please don't say they're like, we have a great idea, we're going to put it into SpaceX and Tesla, and like, where did this idea come from?
I mean, it's pretty close. They said they might use it to buy TikTok because they can no longer have it in China. It now that's still a thing. They said we could use these funds to invest in TikTok and make money. And oh man.
To that I say, wrong answer.
I don't know. Like if you would have bought used national funds, like the last time we had to buy out the banks, right? How much money did we make off of that as a government? A lot, right? Because you rescued them all. Again, if they should have or not remains to be seen, but they made a big return on that because they bought in and whatever and got to sell it back and blah, 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 whatever. But I don't know, man. And TikTok could be a good return. I don't know. Not where I'd go with.
Look, the world devolves into a worldwide war for some reason, right? You're looking for national security. You want resources, gold, silver. You want hard metals. You want manufacturing. And we're going to be like, well, ours was in where we're doing dances to auto-tune.
Yeah. I don't know, but there's no money there anyway. So I don't even know what anyway. All right. I think I got 2 more. There is a state in our union that does have a sovereign wealth fund. It is known as the Permanent Fund. Is it Texas, California, Alaska, or New York?
Feel like those Alaskans just do some smarter things up there. I'm going to guess them.
Spot on. Yeah.
Thank you.
So again, another region that you don't think, I thought you'd go Texas, right? When you talk about oil and things like that. But I feel like they have less expenses up there in such a ginormous land area that, that they have that all built up already.
I'm learning things today.
I know, right? And now here's the most obscure one that I just want to touch on. The financial reporting standard that most of the sovereign wealth funds follow to promote transparency and accountability.
Oh, I don't believe in that.
Right. Well, you're probably not alone lately. Anyway, A, Basel 3, B, Santiago Principles, IFRS 17, or D, GAAP.
I mean, Basel 13 sounds like an emo band name. And what was the second one?
The second one was Santiago Principles.
I feel like that's a Hallmark movie. So we're going to go with 3, IFRS 7, whatever.
That is incorrect. It is the Santiago Principles.
Oh, Hallmark movie. Okay.
I had never heard of, and these are 25 voluntary guidelines that assign best practices to managing this, and I won't go through all of them, but some of them sound good. Sound legal framework, well-defined mission, clearly defined rules for drawdowns. Some of them, again, I question here. Transparency to the owner, ethics and professionalism. There is annual reporting requirement. God, there was one more. Restrictions. Oh, here's the one that I think is going to be the most spicy. Operational independence from the owner. I feel like we have a lot of very independent people getting put into places in high power in our government right now. That one I feel like I'm going to struggle a little bit, but yeah.
So here's the question, Jeremy, can you put together a better framework and we'll have the Van Grill architecture, and we'll start using that? WeWork did it, right? They had the net adjusted EBITDA or whatever that took out things like, it was the fun adjusted, right? You took out rent and payroll and all of a sudden you're profitable. You could come up with something.
Yeah, I think we could come up with something. And definitely if I know fund accounting. So if you want me to manage the books for this fund, give me a call. That would be a good use of our surplus funds that we suddenly have.
Hey team, this message is for our bookkeeping buddies out there. And I know when my firm offered only bookkeeping, it was super hard to find a tax preparer to partner with. Well, if that's you, look no further. Me and my team at Specialized Accounting are looking for bookkeep to partner with. We will do the tax planning and preparation for your clients, and you keep doing the bookkeeping. No longer have fears of working with a tax preparer that doesn't know what they're doing or live in fear of them stealing your clients. Me and my team, we want to continue to grow, and I want to continue to grow Unaccountable without growing the name that we steal clients. So we would love to partner with you. If you're interested in working with our team to do the taxes for your clients, reach out to hello@specializedat.com. That's Specialized Accounting and Tax, specializedat.com. See you soon. And with that noise, we are already at halftime. We have just destroyed people with, it's hard because all these updates in the government affect taxes and bookkeeping and accounting. Yeah. But let's dive over a little and go look at a nice little app, a little app snack today for someone that's doing some cool stuff in our space. And today, Jeremy, we're going to be talking about our friends over at Anchor. How much do you know about Anchor? I'm taking lead here, but I want to see what you know so far.
So I do know that the people at Anchor are awesome.
Yes.
I've met several of them, and they have great after-conference get-togethers where we all have a great time. But I do know it is for like proposals and payment processing and billing for clients. And I've really heard good things from people who are using it. I am not currently using it.
Yeah. So we have recently switched over to Anchor, and that's why I wanted to talk about it. Plus, so they were in Salt Lake, so we went axe throwing together, me and a couple of other guys the other night. Why not? But no, they've done some cool stuff. So Anchor is an all-in-one proposal and billing software. And the beauty of it, I love softwares that people are just getting their firm starting, do not have to pay an arm and a leg to get going with. Well, guess what? You can get up and running with Anchor, have it built out, beautiful, and ready to go for free. You only pay when you start sending out proposals. And you don't even pay when the proposal is sent. You pay when the client pays. It is a flat $5 charge per payment. So you can send a proposal that not only breaks down, here's the services we're going to do for you. You can make some services optional, so they can decide if they want add-ons like AP or sales tax filing. You can set rules on it. Does this charge monthly, quarterly, by service? You can even create packages like we are doing, saying, do you want your financials on the 10th, 20th, or 30th, and have different pricing? They can go through, select what they want. You can include walkthrough videos on the very front of a goofy-looking guy telling them what's going on. Well, in my firm, it's a goofy-looking guy. I'm sure the rest of our listeners have someone much more appealing. But you can customize these things, send them out. Now, what I love the most about it is whatever terms you put in the contract automatically execute, including things like our annual increases, 5% increase on services. So no longer do I have to every year go in and say, did we up their rates? Did we modify it? Nope. Anchor is just going to automatically on every annual renewal or whatever date I say is the renewal, they're going to automatically increase the price of that service a certain amount. You can also put rules in there about, if a client doesn't approve an out of scope invoice that you send within 7 days, it auto approves. The clients can sign that on the initial agreement. And then every subsequent one automatically goes through because they signed it on the first agreement. Even things like you can pass on credit card fees to the customer if you want. And Kirsten Reeder and I had a big old conversation about this. There's a big old discussion in Anchor's whole platform, but even states where you can't pass on credit card fees, the way they process it is Anchor takes the fees and they do the service, and then you don't actually charge the customer. Anchor is the software that's just charging them a processing fee if they want to use their terminal. They figured out a way around it. I have not heard it challenged yet. Like super cool stuff that people are doing in this space. And again, it's cut down time. It syncs with my financials. So no longer am I creating recurring sales receipts and then having to go match it from my prior payment processor. It's automatically creating the invoices, mapping by product. It's changing the game for us. And I can make Zapier automations come off of it to like kick off things on my other platforms. Like Jeremy, I'm gushing because I'm just in love with what they are doing. Even this last week, they're constantly innovating and I'll shut up here in 15 seconds. They added the ability to approve proposals directly from the email, so clients don't even have to go to the web page if they don't want. Proposals now can have expiration dates, so you can say limited time offer. So you can send out all your tax proposals in December at a cheaper price, and if no one signs, they all die, and then you can, change them to the new price. And then lastly, they just raised a whole bunch in Series A funding. So you got to believe when they get that type of money, all of a sudden they're going to start innovating more, faster, and do some cool stuff. For $5 a charge, it's wonderful if you're charging a good amount for your clients.
There's a lot to unpack there, Tyler. Wow.
I know. I threw so much at you.
The most impressive thing is that you're not wearing an eye patch or something similar bandage on your head after going axe throwing.
Yep.
But that's fantastic. Yeah, I mean, I have only heard good things. And our community, we will complain to each other if software sucks or their thing sucks. And I have never heard anybody complain about Anchor. So they're obviously doing amazing things there. I was also doing quick math in my head about that $5 charge per transaction, right? Yep. So that is like if you set up regular curly monthly, every single time your monthly charge goes out, you get charged $5. So if and we talk about where you need to have minimum amounts out there, and let's make that higher, even if your minimum amount is $500, that's 1%, right? Whereas other payment processors are like, what is QuickBooks now? It's $10 plus 1.9% or something.
If you're grandfathered in, the best you're getting is still 1% capping at $20.
Yeah, right. So, I mean, just the payment processing piece is awesome. So, yeah, I mean, I think those are all pretty cool things. Also, the fact that they can match that up in your software, because that is something that, right now we're using Pluto, right? And Pluto's models, they do a flat fee. And I will say it is more cost effective for us than the $5 per charges. But I still need to do that, as we need to, when the thing comes over, match it in our software and make sure that they connect. Whereas that's all automated. I need to do some cost benefit analysis around that, because that is just time we're putting in on it. So if that's all on the front end. But I also think the auto escalating thing is probably the best thing, right? Have you had a cycle where these have happened yet and they've escalated? Because I don't think you've been on it super long. Right.
We haven't been on it super long, but as we were converting clients, we went in and said, and actually every new proposal since December has been through Anchor. But we've had existing clients we're switching over, and it's just we were able to say, starting in March, starting in April, their auto increases are going to happen.
Yeah. And I'm just curious if people will question that. We both know people look at their books in various different levels. Some people won't notice.
They won't, because we did this before. Our contracts, we used to use better proposals for our contracts, send them over. It would say the annual increase, and then we would get their payment details in CPA charge. And then every annual notice, every month, my assistant would have to go in, modify their recurring sales receipt, and then go change the amount we automatically charge them in CPA charge. And then it would just all go through, and then we'd have to go match it. So we've been doing the auto increases just manually every month for 2 years. So clients, they either notice and they're like, yep, I agreed to increases, that's fine. Or, they don't notice at all. But either way, I'm not worried about that aspect.
Yeah. That's the only thing that concerns me, but it's probably unfounded. So, yeah, cool things. And yeah, if they just raise a bunch of money to Anchor, I wonder what is on. Did you get any secret? Here's the game plan going forward.
So I got to talk with one of their execs.
Yeah.
And I mean, it's just the stuff that they've got coming down the line. It's just common sense features. I mean, it was a week ago and he told me about what was coming out this week, right? Approved from email and, expiring ones. But they're just doing some cool logic, some cool integrations. Right now, they already partner with Financial Sense and Carbon, so you can have automatic kickoffs. They're working with the boys over at Keeper. They got Zapier. Ooh. They're doing some cool stuff. I want to be able very soon from my CRM, if someone fills out a form in my CRM, I want to be able to kick off a proposal straight out of Anchor. And you can't do that yet with their Zapier, but they know that's on their roadmap. They haven't promised when. So they're doing cool stuff and they're getting more money.
Yeah, that's pretty awesome. And they and all the people I've met there, and we've talked about some other vendor people that we met that are nah, he's a little bit sketchy, but these guys have all been just amazing, warming, I think you had a contact there and we went somewhere together and they're like, "Hi, Jeremy, fantastic. What can I get you? How do we do it?" Just great guys all the way around, which again, just gives you the better warm fuzzy that they're going to do the right things. And they'll be a great partner for your business.
So check them out. I don't know if we have a referral code at this moment, but if we do, it'll be in the show notes because we just highlight apps we like. If we were smart and didn't want to lose money every year on this podcast, we would actually go get referral codes. But hey, this just tells you, we could be bought. We just aren't proactive enough to actually be bought. So you can trust us. Next up in our episode, Jeremy, I got a game I want to play with you. But first and foremost, how many of your clients, and I know you don't do taxes, but they start thinking right now in February, I should really think of what I can do to lower last year's taxes, to which every accountant right now screams, "Too late, you idiot. You should think about this in the year." But is this a common refrain we hear from your average business owner?
Yeah, I would say we have very few nonprofits, right? But
is that what you refer to them as? Non-nonprofits, not for-profits. They're non-nonprofits.
Non-nonprofits. That's right. We like double negatives here. Yeah, so we have very few of those. And honestly, when we take those relationships, we are very clear that we are not tax preparers or tax advisors. So I think we get shielded from a lot of this because we're like, "Oh yeah, Jeremy told me he's not going to answer my tax questions." So yeah.
For that reason, I want to bring up a game today that I'm going to call Under the Wire. This is a game all about things that we can sneak in under the wire to get in some tax savings into last year after the fact. Now, I had to confirm with my wife, Under the Wire apparently is not a bra reference. Apparently, that's a big deal. No, we're talking about what can we sneak under the wire as far as getting tax savings back into last year. You ready to play?
Yes.
Okay, let's start off with an easy one for you. Which of these two types of retirement accounts can you make contributions to after the year has ended for a tax benefit? A traditional IRA or a Roth IRA?
So I feel like that when you ask these questions, these are always the hardest ones. But I'm guessing with the tax consideration, it should be a traditional one.
Well done, sir. Yeah, because Roth, you pay the taxes now, obviously. Yeah. So there is no tax savings. But with a traditional, we can backdate until we file our taxes, or April 15th, extensions don't apply. We can reduce that taxable income, push it down. So, nice and easy. Way to go, Jeremy. Next question. Which of the following can I backdate into 2024 right now? A, income I earn in the first 90 days of 2025. B, HSA contributions until April 15th. C, the date of birth of my child if it was before January 30th. Or D, the date of my divorce if my ex-spouse was a real poopy face.
Oh, those last two pain. I'm going to go with B.
Well done, sir. So this is a fun little one because, again, there's not a lot we can do, but the HSA, dollar for dollar, get money out of your taxable income, put it somewhere where you can invest it, and just let that money grow. Spoiler alert, I love the strategy of never actually use that money. Just let it grow and then save the receipts and take it in 10 years and let that money grow. But yes, the HSA is a real easy one. As long as you had the high deductible health plan in place in December, you can backdate. There's some cool stuff you can do. So obviously work with your tax preparer because there's a few little limitations. You want to make sure you do it right. But that's an easy one, up to $8,300 if you're married. Come on, why wouldn't you? So next question, Jerry. Now we're going to get into actual stuff. If I file taxes on accrual basis, if I pay out bonuses in 2025 for 2024 performance, I can backdate those bonuses up until what date? Would you like a hint?
No, I was trying to think through this. Like the bonuses are based on 2024 performance. Okay, and I would assume we're talking cash basis because if you had accrual basis, you would have had an entry in for it already.
Well, but maybe you haven't. Maybe you haven't put that entry in. It's, you know, that's the whole point is we are now here, let's say February 5th.
Yeah.
As long as we pay those out by a certain date, when can we backdate those two and accrue them into last year?
Okay, that makes more sense. March 15th.
Well done, sir. 2 months, 2.5 months, so March 15th, you are allowed to backdate into the prior year. Now, there's some restrictions around this, because first, as you called out, accrual basis, right? If you paid them out this year in cash basis, it is what it is.
Yeah,
so,
right.
Accrual basis. Now, there's a certain rules, and it definitely, again, work with your taxpayer to make sure, but your clients could, if they file an accrual, this could be an easy way. Now, there has to be certain rules, like the bonus amount must be reasonably determinable by the end of the year. So, like, you know roughly what it's going to be. It's not like you decide mid-February, well, finger in the air, I'm going to do this. It's reasonably determinable because you've already had a bonus structure in place. The economic performance it's based on must have already occurred. So I think back to my days at Montage, we would always get our bonuses end of February for the prior year because it was based on certain performance. And then also, did the company make its margins? Because if it failed, by 80% or something, all bonuses were off. So the economic performance had to have already happened. And then bonuses can't be subject to conditions or limitations that might make it so the employee can't get it. So it's their money as long as they work there. Make sure you know all the rules, but definitely good to know if it's an accrual-based filer.
Right. And I feel like I like the fact that we pay ours out before Christmas, right? That people can use that money. I hope we're mostly good financial people that you don't need it. But paying it out in February does put some good hooks in people through all the January, February craziness that they'll stick around for that. So
I'll be honest. I mean, I file taxes on cash, so this doesn't apply to me. So I always take the expense in February. But my rule is I pay these out at the end of February because I don't want to lose staff in January. I want them to stick out January. That's why I pay my annual bonuses in February. Love it or hate it, it's a good strategy in my opinion.
Yeah, it's true.
All right, 2 more questions for you. First off, again, accrual basis filer. Okay, setting the stage. Which of these can I backdate? Bills that were paid in the first 30 days of the new year, bills that their corresponding expenses were incurred in the prior year, or termination pay for an employee fired in January for a December offense.
I feel like the first 2 could be the same thing, right? Couldn't you? So I'm going to say B. But like when you do this, it has to be.
I mean, technically, so
yeah.
If B is right, A is sometimes right. But if A is right, that doesn't mean B is right. So B is always right. If on accrual basis filing, you go through and look at all their bills, right? And let's say a vendor is lazy and didn't get a bill for December cleaning over to them until February 1st. The vendor dated it, February 1st bill, gave you 15 days to pay. But it says December cleaning services. Backdate that sucker. Put an accrual. Well, you don't even need to backdate the invoice. Just put an accrual in to push it back into last year. Get those expenses off the book. If your client is looking for ways to do anything, hunt through January and February, all those bills and expenses, and be like, did any of these expenses get incurred in the month of November, December? If so, accrue that expense. Or is there a bill they're waiting on they haven't even received, but you know that the bill's going to get paid someday? Well, what's your best guess? And a lot of times I'll go to clients like, what's your best guess? And they're like, I don't even know. I'm like, well, how about $3,000? And they're like, no, it's going to be closer to 500. I'm like, great. That's the number we're going with because you can reasonably accrue the expense that you would assume it's going to be when you don't have documentation. Fun, right?
Yeah, I think as soon as you started talking, the Venn diagram came into my head about what was spent and why one was okay, the other one was not. And also, like, we have done this for clients. You're trying to get everything in the right year. Is like we've emailed their vendors and be like, hey, we haven't got an invoice for this yet. Can you provide us an estimate, please? Yeah. Because they all get audited, so we need something out there that estimates it. So yeah, absolutely.
Yeah, I loved this game in corporate, trying to just be like, can I come up
Yeah.
with anything else that we can reasonably estimate? What about employee labor on a capital project? Can we estimate that? It was wonderful. Last question for you, Jeremy. True or false? I can backdate a charitable contribution on my personal taxes into last year.
Ugh, I should know. I'm counting false.
Yes, absolutely. You cannot backdate it. I had clients that still think, well, I backdate my HSA. I'm just going to, now that I think about it, I want to give it to this charity to get a few more thousand. So let's put that into last year.
Yeah.
Ew.
No, yeah. And it's shady. It's shady enough that, charities legally cannot place the value on the donation you're making. Legally,
Well,
they
unless it's
cannot
a
do
dollar
that.
amount.
Well,
Well,
unless it's cash, right? Or stocks or something that already have a nominal value to it. If you're donating goods or services, they cannot put it on there. But like if you go to Goodwill and the good ones at least fill in the date of your donation slip, right? So you can't change the date on those, but they never fill in the dollar amount, right? So you have to like put in reasonable amounts into that. But yeah, we get some shady people all the time, or like even trying to recognize these donations that they get and be like, no, can't do it. It's dated past this. Not happening, right?
Well done, sir. Yeah, more than half. Way to go.
Whew. Love it.
Welcome to Fast Figures. 10 questions, 1 minute-ish. All answers are numbers. The game starts now.
So my turn to do fast figures and quick tangent, and this is going to be a long episode, people. We got a lot to talk about. I'm sorry. But I went and played with Monarch Money the other day and went and got it and put all my things in there. Love it, first of all.
Right.
I told you, a whole bunch of accounts because I don't move them. There was only one that didn't sync right. And I already...
And you went and built it.
I just put it in there and built it, right? Yep. And I also said, I'm going to move those funds somewhere else because I don't want to have to do this, whatever. Anyway, but I thought it worked really well. But I remember us talking about what you would include and not. And one of those things is spurred me to go down another rabbit hole. So I have two very concentrated themes for you today. One accounting related, one and not. For fast figures, are you ready?
No. Minute on the clock.
Let's do it. Okay, what is the percent penalty for withdrawing funds contributed to a 529 plan?
The penalty, 10%.
What is the percent penalty for unqualified distributions of earnings and interest from a 529 plan?
10%?
What is the maximum amount in a 529 plan that can be converted to a Roth IRA for the beneficiary within 5,000?
Within 5,000. Okay. My brain was like, is it 25 or 35? Because I'm fairly confident. So I'm going 30. That should cover me, I hope.
Within 10%, what percent of Valentine's Day cards are purchased by women?
60?
Within $50, how much more did men spend on Valentine's Day gifts in 2024 than women?
60.
What is the maximum amount in a 529 plan that can be used to pay off student debt within 5,000?
25K.
The flower-adorned skull of Saint Valentine is on display in the Basilia of Santa Monica in Cosmedine, Rome. How many countries have part of the remains of Saint Valentine on display?
30.
Within 25 years, when was the first heart-shaped box of chocolates introduced?
1910.
What is the IRS form that is provided by the school that shows the amount you paid them for tuition and related expenses?
1098T.
Within 10%, how many hours is the world record for the longest kiss?
Well, I didn't submit any forms when I did it, but I'm going to go 36 minutes.
36 hours?
Oh, hours. Yeah, that's what I meant. Sorry.
Cool. All right. So two distinct things, 529 plans, and when our episode drops, it is going to be the 13th.
Yep.
So if you haven't gotten something for your sweetheart, go out there and get her something right now.
Thank you, sir.
All right, so let's unpack this. So first one, what percent penalty for withdrawing funds contributed to a 529 plan? You said 10. It would be 0 because you can take out the amount you contribute at 0%.
Oh, the principal. It's like a Roth,
Yeah.
right? You can take the principal back
can
out.
take
You only
the
pay
principal out without
penalties and
penalties.
interest. Good call. Trick question. Well done.
And the reason I went down this rabbit hole is you said when you're talking about Monarch, like, hey, I'm not going to put my college fund for my kids into my investments or my net worth because that's for them. But then I'm like, can I take that back if they don't go to school and don't do it? So I'm like, yeah, I can take it back other than the earnings. So I'm like, I'm going to include it. I don't care. I'm going to overscore. So yeah.
Good call.
Yep. But then what is the percent penalty for unqualified distributions of earnings and interest from the 529 plan? You're perfectly right. 10%.
10% was ringing around there somewhere, but
Yeah.
I got confused and all like the fancy wording and your face and how shiny your head is today. It just all got to me.
Yeah, it was the first time I waited. I had no shave January, and now I just feel way more unfettered. Number 3 was, what is the maximum amount of a 529 that can be converted to a Roth IRA within 5K? I was impressed with you. You said 25 or 35 is there, so you were a smart mathematician. Picked 30, and it's 35,000. Well done.
I could see that number, but I wasn't confident if it was 25 or 35, but I felt really good. It was one of those.
Yeah, and I felt pretty fair using the 5% margin there, so that was a good job.
5K, 5%, 5K.
Oh yeah, 5K. Yeah, 5K margin, right? All right. Then let's switch gears for a few questions here.
Real quick, can I actually go back on that question though? I know we're running long already.
No,
but
fine.
like this is, people talk about like, do you give to the kids 529 or not?
Yeah.
As a business owner, this is where every dollar I can, I want to try and get my sons to work in my business, cleaning this office, shredding paper, dusting, helping me with anything, because, people talk about, hey, if you put it in their 529 and they don't use it, great, you can, roll it over. And it's like, but I'd rather put more away and have no restrictions. And then they could still use it and pull that principal because it would be a Roth. They could pull the principal if they need it without penalties. So it's like,
Yeah.
again, if you're a W-2 earner, 529 is the best out there. But man, if you can get your kids some Roth contributions now, go, go, go.
Yeah, 100% agree with you there. I have a first child that had a W-2 job this year, and I don't know what to do or what the right tax thing. So I'm gonna have to talk to a smart tax professional, if I only knew one, on how we should handle it.
Charge $500 an hour. Let's do it.
Let's do it. How dare you charge me that much when you're only going to spend one day? Anyway, all right. Let's Okay. Good call. Within 10%, what percent of Valentine's Day cards are purchased by women? You said 85% of Valentine's Day cards in 24 were purchased by women.
I mean, I want to assume the women did better than men, like they one-upped us, but wow, 85.
85, yeah. You know who Hallmark is supporting. Supporting Hallmark. All right, the next one. Within $50, how much more did men spend, though, on Valentine's Day gifts than women? You said 60. $133 more. Men spent an average of almost $250.
What?
Yeah, right? And women spent 115-ish. So the difference, if you do the math between it, is about $133 more.
I feel like this data sample set got the wrong people, because who is spending $250 on Valentine's Day gifts these days?
It's according to Lending Tree. So I feel like
All
they
right.
have some good stats, maybe. I don't know.
They went and
maybe
stood
because-
outside of like Tiffany's and said, we'll ask people. Like, that's a
Yeah.
bad data set.
Yeah. But maybe it's because women are buying all the cards, right? So cards only cost $5. Nah. Next one. What is the minimum amount in a 529 that can be used to pay off student debt? I did not know this existed, that you could do this. That's why I went down the rabbit hole. Within 5K, yep, right away, you said $25,000. It's $10,000. So I went down the rabbit hole. I want all the things here, and I'm like, these are great questions. We're going to bring them in.
Yeah.
The flower-adorned skull of Saint Valentine is in the Basilia in Rome. How many countries have the remains of Saint Valentine's on display? You said 30. No, there's 6 countries. You will find other bits of Saint Valentine's skeleton on display in Czech Republic, Ireland, Scotland, England, and France.
I'm
Who
okay
knew?
getting that one wrong.
Oh, yeah, you should be okay. Get that one wrong. Probably under the same vein, within 25 years, when was the first heart-shaped box of chocolates introduced?
Should have gone earlier.
You said 1910. It was 1861. The person or company that put this out, you do know the name. You want to make any guesses of who put the first box of heart-shaped candies out in the world.
I mean, some department store that's been around forever, maybe? Oh, wait, no, probably a chocolate company. Hershey's? No, Hershey's was in Pennsylvania in the 1900s. Dove?
No. It would be Richer Cadbury of Cadbury Chocolates started this. And today, more than 36 million heart-shaped chocolate boxes are sold per year, amounting to 58 million pounds of chocolate. Whew.
Wow.
That could be that river that you swim in when you're in Charlie and the Wonka.
That's a lot of diabetes.
That's right. All right, number 8. IRS form provided by the school that shows what you paid for tuition-related expenses. I would have accepted a 1098. 1098T was exactly right. Fantastic. Well done. And again, you getting the account questions probably a little more impressive than Jeremy's shenanigans.
And then the question is, because there is no spot to actually enter the 1098T, so are you going after the American Opportunity Tax Credit, the AOTC, or the Lifelong Learning Credit? And then you got to qualify, and then you phase out if you make over 180K. It's almost like I know things, right?
Let me wake up our listeners now and get to number 10. All right, last one. Within 10%, how many hours is the world record for the longest kiss? You said 36 minutes. You said 36 hours.
36 hours.
Not correct. The answer is 58 hours and 35 minutes that a Thailand couple kissed for, which it's in the Guinness Book of World Records, but it is now banned because of health risks. Because the rules of the event included not eating or drinking and staying awake and no rest breaks. So between the sleep deprivation and like water not being consumed and food, people were getting like severely health issues related to this. I can't even imagine. Ugh.
I don't even want to be in the same room as someone for 58 hours straight.
All right. Much less and you could just see, there was a video of this I found on YouTube, and you could just see the pain in their faces and be like, is it really worth it? Good Lord. But yeah, that's a long time to pucker up, Buttercup.
Wow. Well, 3 out of 10. I'll take it.
Was it 3 out of 10? Yeah. That wasn't bad. There were some hard questions there. A lot of shenanigan ones I probably didn't give you a chance. So nice work. All right, and that brings us to our winner and loser, and let's do this quick. This has been a long one. The winner this week could be you, Tyler. Diane Lopez Tax Accounting Service in New Bedford, which is in the Northeast, has been helping South Coast with its taxes for years now, and they're going to give some fun radio listeners free tax prep if you sign up and are a winner each Friday. Up to what dollar amount do you think you would get free?
$300.
$200 free. I hope.
That's like Applebee's saying, hey, come in and we'll give you a free dinner up to $150.
But that, she's probably only charging $200-$300, but maybe not. Maybe it's the hook. Either way, this is bad. Either you're charging too little or you're baiting and switching, right? Like, oh, come in for free tax, and here's your $1,000 bill, which you should be charging probably, depending on it. Yeah. So, all right. And then for loser of the week, I have a consistent loser 2 weeks in a row, Elon Musk. Which, again, can you call the richest person in the world a loser?
Why so this week?
With all of the announcements that are out there with the government changes and tariffs, his stock and overall net worth dropped $12 billion last week. Should you be mad about that if it's already over $400 billion? Probably not. But that's still a hard pill to swallow when, you're involved with all the government things. These things are happening. Hey, $12 billion gone from my net worth in 2 days or whatever it was. So,
I mean, as with everything, you only actually lose the money if you sell it, right? So,
that's very
not
true.
Losing too much sleep over it. I think the real losers are all of us accountants during tax season trying to keep up with all the changes right now. That's really the loser.
Yeah. When you say you don't do payroll processing because of the pressure and I don't want to be stuck to this, but then you say you do taxes, it'd be like, yeah, there's tit and tat there.
Well, Jeremy, we're already over. That's all the time we got for this week. But I'm excited for our next episode because we've got a guest that, I feel like he has time to really rethink his life choices and respectfully bow out. But assuming that he doesn't wise up, I'm really excited for our next guest. So tune in next week. Get excited. Jeremy, good luck surviving February.
Yes, and say Happy Valentine's Day to your sweetheart.
Absolutely. Do you want to make $10,000 today? Do you want to lose 20 pounds in the next month? Do you want to be well-liked and respected by all your peers? We can't help you with that. You've come to the wrong place. But if you do want to earn an hour of CPE credit for listening to this episode, right after you finish, head on over to the Earmark app, take a short 5-question quiz, and you earn 1 hour of CPE just for listening to us. Happy quizzing!